Hello everyone, happy new year. It's good to be back. So we are back with our usual weekly outlook videos. That was a good break. It's nice to take a break because of course it was the holiday season. Of course it's family time. Now we are back. So because we are starting a new year, it's 2026, we have to start with the yearly time frame. So guys, I don't look at the yearly time frame every single time we do the weekly outlook. I'm only looking at it right now because we're starting a new year. For those people who've been with me for some time, we look at the time frame anytime we're starting a new week. We have to start with the weekly time frame. New month, we start with the monthly time frame. New quarter, we look at the 3 months time frame. I hope we now get it. So, of course, if you look at the year, so 2025 was a bearish year. The dollar was weak. And if you look at it so far, we have this fair value gap right here, which you can see that's what price has tagged. Price has tagged this yearly fair value gap. So if you look at this time frame, of course, you can see from the year of from 2011 actually, you can see we've had this bullish move. We made a higher high. We got that retracement to this fair value gap here. Then we've made a higher high. And you can see as we've made this higher high, we're even above, we closed above this high. So we've made a new high here. Of course, this was a week, we wicked and then we had that, but it's a new higher high. Then this right here was a retracement. So two things are likely to happen. Of course, predicting or getting buyers for the yearly candle is not easy because 1 year is a long time and there's so much that happens within a year. So we're not here to predict the buyers of the yearly candle. But I want you to see, in case you're going to have a bullish dollar for the year because of just good economy and all that, of course, you see how price can use this fair value gap as support to give us a bullish dollar. But then if you're going to have a bearish or a weak dollar, for whichever reason, fundamental news, whatever is happening in the country, then there's a high probability that you're likely to get a retracement, tag this order block, then before we get that bearish move. Because of course, if you're going to have a bearish candle, a candle opens from the high, from the low, and then close. So it would be nice if you get that retracement and then continue bearish. If you're going to have a bullish dollar, then it would be nice if we open, sweep the low, then get the bullish expansion. But then again, as I've said, there's so much that can happen within 1 year, so we are not here to predict. Yeah. So let's look at the 6 months. So if you look at the 6 months, you can see we have, of course, this order block here, and we have this fair value gap, which you can see. You can see this was a bearish. So the first 6 months of last year was really bearish. This is what we had, and then the last 6 months, that's what we got. So yeah, this order block here is 6 months, and also still the yearly order block. So if you're going to have a bearish dollar, it would be nice if we sweep this high and tag this order block before now we get the bearish move. If you're going to have bullish, then I would love to see us take this low because we open from the low, then we get the expansion and close. So if you look at the 3 months again, you can see this still just looks like a retracement. It all looks, because of course we've had all these move here. So also this still looks like a retracement where price was retracing to tag the fair value gap and then you continue with the bullish move. You can see we have this fair value gap here. So in the course of the year, or in the course of the year, yeah, in the course of the year, if actually if we violate these 3 months fair value gap, this would be actually a nice confirmation that going forward we should anticipate now bullish moves, and our draw of liquidity will be this high here, and this high will be asking too much. This high here then will be our draw of liquidity. If you're going to have a bearish year, again, of course, you would see we'll have this move, tag this. Of course, this was a 6 months order block and also the yearly order block, and you can see it's in line with the 3 months fair value gap. It would be nice if price would tag this and then use this to push price lower. Then, of course, our draw of liquidity would be what? Would be these lows here, and now maybe potential some other lows here, of course, in the course of the year. So guys, if you find value in this weekly outlook video, kindly hit that subscribe button. 33% of you who watch these videos, you have not yet subscribed. Subscribing will actually help the channel grow. Please do so. So let's look at the monthly time frame. So if you look at the monthly time frame, so of course it's a new month, January. So this is where we start from. If you look at the monthly time frame, of course, you can see we had this fair value gap here, which has been violated by price. So right now, this is an inversion fair value gap. So of course, currently you can see this is more of a consolidation. Now, if you're going to get a bearish move for dollar, then we'd want to see price use this inversion fair value gap to give us that bearish move. So if price fails to use this inversion fair value gap to push price lower, and instead we get a candle body closure above it, of course, then that would mean after the month, that will be a good confirmation of bullish dollar for some time. Then I'll be looking at these highs here, these highs here, and of course we have this fair value gap here that the market might want to retrace to. Because if you see, if you look at this price action here from actually January 2025, February actually, we just had all this bearish move. Then of course this is a consolidation. So I won't be surprised if you're going to get a retracement to 50% of this range. And you can see 50% of this range actually aligns perfectly with this fair value gap here. So let's look at the weekly. So if you look at the weekly, of course, we've had all these bearish move, and this is our monthly inversion fair value gap. So there's a high probability this bullish move that we're seeing here, the market is likely to retrace to this inversion fair value gap. So I want to see actually price get to this inversion fair value gap. Then once price is here, that's now when you can decide if you're going to have a bullish uh, move or bearish move. And if you take a fib from this high to this low here, we can see 50% of the range is actually around here. So this most probably is just looks like either it's a retracement to continue the bearish move, or we are now reversing and we are likely to see bullish moves. So let's look at the daily time frame. I hope you guys are able to see how I'm able to break this and look at this price action from the higher time frame to the lower time frame. So this is our likely draw of liquidity for price action as of now. And if you look at this price action, you can see how price actually, we swept this low here, and price filled this gap here, this gap here, before us getting these bullish moves here. So then which now can you see how also the lower time frame is aligning with our higher time frame draw of liquidity, or our high probability or potential a draw of liquidity of the higher time frame. So this is how it's aligning. You can see how actually we have all these move here. We have inverted this fair value gap here, and you can see this was a retracement. We had a retracement. We tagged this other fair value gap, this other inversion fair value gap down here. So far, the daily key level that I'm looking at that the market is likely to use to support our bullish move, of course, is this, which has already been tagged by price. Yeah, because we're looking at this inversion fair value gap. This high here would be my draw of liquidity. But I don't want to really look at one-sided bias, because if you see this clearly, this market has been bearish, making lower lows, lower high, lower lows, lower high. We have this order block here, which price has tagged this order block. So there is also a possibility of us continuing with this bearish move. Then we're going to reclaim this inversion fair value gap. Then it's going to be used as a reclaimed fair value gap to push price lower. So yes, I also see how we are likely to have a bearish dollar. Then I'll be looking at these lows here, because you can see lower lows, lower high, lower low. This will just become lower low. We get a retracement, then we continue with the lower low. So also that is a possibility. So I'm not really one-sided on the bias. I see how you're likely to have a bullish and a bearish dollar this week. So guys, if you enjoy my teaching style and you want to learn more from me, starting January 28th, we have online classes and I'm the main tutor. If you have issues understanding ICT, or you understand ICT but you have a problem putting all the concepts into one to come up with a proper rule-based trading strategy, then that class will serve you right. Also, if you want to understand how I'm able to do these weekly outlook starting from the higher time frame all the way to the lower time frames, that class will serve you right. So just check the link in the description box below. I promise you there's a lot of value that you're going to get from that class. So next, let's look at USDCHF. So USDCHF and DXY are positively correlated. So positively correlated pairs, they move together. So, and as you can see, of course, starting with the yearly candle, it's a bearish year. It was a bearish year, 2025. Same with the DXY. So if I was looking at, if this was a lower time frame, maybe a weekly or even a daily time frame, if I was looking at it, I would say this is a high probability draw of liquidity for price. Then I would want to see price retrace, tag this order block, and then use this order block to push price lower. As you can see, of course, this market is bearish, and it has been bearish for some time now. But it's the yearly time frame. So honestly speaking, we cannot start doing that for the yearly time frame because there's so much that happens within a year. So if you look at the 6 months, of course, we have this fair value gap here. And if you're going to have a bearish USD CHF, then this would be nice. Nice to see price use this to push price lower. However, if we get a candle body closure above this fair value gap, then there's a high probability that we're likely to get bullish USD CHF, and I would start looking at these highs as draw of liquidity. But of course, we will know with DXY. Remember, we use DXY as our leading indicator for major pairs. If you look at the 3 months, of course, we have this fair value gap. So if you're going to have a bearish move, it would be nice if price sweeps this high here, target, and then you get bearish move. But anyway, again, we'll see in the course of the year. So let's look at the monthly time frame. If you look at the monthly time frame, honestly, where price is now, there's really nothing much that we see. This is just consolidation. So let's look at the weekly time frame. Again, on the weekly, as you can see, it's just bearish, bearish, bearish. And so far, price has taken all this sell side liquidity. And yeah, that's all I see. On the weekly, of course, we've had all this bearish move. And of course, this is an order block here. There's a gap here, a small volume imbalance. We'd call this a volume imbalance. That's the only PDRA I see here, volume imbalance. And also there's this volume imbalance here. So if you look at the daily time frame, of course, you can see we have this inversion fair value gap here, which price actually targeted on Friday. So it would be nice if price uses this inversion fair value gap to push price higher. At this point, what I've done, I've used DXY as my leading indicator, and I'm just now using DXY to align it with that bullish bias. But of course, if DXY is not going to respect our bullish bias and we're likely to get a bearish bias, bearish moves this week, then of course expect the same for USD CHF. And if that happens, then of course you can see this fair value gap here. These are daily fair value gap, and you have this volume imbalance. Then price would use that to push price lower. So let's look at EURUSD. Of course, again, we're starting with the yearly time frame. So EURUSD and DXY are negatively correlated. So last year, the dollar was weak, and you can see EURUSD was bullish. So this is what we had last year. And then, of course, now price formed this order block here. And you can see price has tagged this yearly fair value gap. So, of course, you can see it's been bearish and DXY was bullish. And we just swept this low, and basically that's it. Fair value gap, and use it as a reversal. And we now continue with bullish moves. We get more bullish moves for this year. Or this was just a retracement to this order block here. If you look at this here, you can see that. So it was just a retracement to this order block, and then we continue with the bearish moves. So 6 months time frame, there's nothing much. We just have this fair value gap here. So if you're likely to continue with our bullish moves, it would be nice if we get a retracement, we tag this, and then use it to push price higher. So if you look at the 3 months time frame, again, we have that fair value gap. You can see we had that high retracement, higher high. So we can now move to the lower time frame and see how price is aligning with our higher time frame draw of liquidity. Okay, so far what we have on the monthly is just that. We had that bullish move and then that's all we had. So let's look at the weekly time frame. So if you look at the weekly time frame, of course we have this high here that price has not gotten to, and you also have this high here. So far, okay, we have this weekly fair value gap here. So I'm watching this weekly fair value gap as a high probability that the market is likely going for. You can see this bearish move. We are likely coming for this. Then once we get here, either price will use it to push price higher, we continue with the bullish move, or we get more deeper retracement. So if you look at the daily time frame, of course you can see we have this liquidity sweep here. And you can see price has been bearish, making lower lows, and we inverted that fair value gap. We have also inverted this fair value gap here. And okay, yeah, we've so inverted with this candle here. So if you're going to have more bearish moves, and I'm watching this as the first draw of liquidity, then it would be nice actually if you have a retracement to tag this inversion fair value gap. Then we use this to push price lower. Or we might just open the week and just get to this weekly fair value gap and end up having a bullish week. Then that would mean we'd end up having a bearish DXY. So let's look at the yen basket. And if you look at the yen basket, so we were looking at actually this has been our drove liquidity for last year. Price did not finally get to this low, but that's okay. So you can see that is how we closed the year, and this is the new year. So it would actually be nice if you're going to get a retrace, because you can see all this is bearish, 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 bearish. So if you're going to get a retracement, then price can come for this low, sweep this low. So let's look at the 3 months. If you look at the 3 months, you can see we are so close to this low here. I honestly want to see us get to this low here. So let's look at the monthly. If you look at the monthly, of course, it's been low, making lows, lows, lows. So far, we have this fair value gap here, and we also have this fair value gap here. So two things are likely to happen. Either we get a retracement to this before we continue with this low, or price just goes for these lows here, then we start get a reversal. So if you look at the weekly, we don't have any fair value gap here. Honestly, there's nothing to see here. So if you look at the daily time frame, so far we only have this fair value gap here, which of course was tagged by price, and it's more of a consolidation. Either we do this and we go for that, or we use this to go for these lows here. So let's look at GBP JPY. If you look at GBP JPY, of course, the year was bullish. So GBP JPY and yen basket are negatively correlated. So yeah, we took previous year high, and this is what we have. And you can see this is an inversion fair value gap on the yearly time frame. So let's look at the monthly time frame. Those are the time frames, guys. You can just go check it out. So far, that's all we have, and this is the inversion fair value gap that we identified on the yearly time frame. So that's it. So if you look at the weekly time frame, so far we have this fair value gap here. So if you're going to see bullish moves, it would be nice if we get a retracement, we tag this weekly fair value gap, and we use it to push price higher. So if you look at the daily time frame, this is a weekly fair value gap. So yeah, I'm watching this. I'm watching this as a high probability that the market can get to this point, or price might actually fail to get here, and we just continue with the bullish move, or we open the week, we sweep all these highs, and then we get that retracement. But this is my high probability level. I want to see price get here. So guys, because of time, so these are the only pairs we're going to look at this week. But from next week, we will continue with all the pairs the way we normally look at. We'll look at gold, and we'll also look at NAS 100. So if you enjoyed this video, give it a thumbs up. If you have not subscribed, please subscribe to this channel. I'll see you in the next one.